Hello and welcome to Real Investment News. I'm Scarlett Fakar. Right now the Dow is down 150 points, the S&P is down 17, and the Nasdaq is down 40. In one of today's earlier reports, we spoke about how the Feds are preparing to raise interest rates in March, all part of an effort to curb inflation and keep growth in check. But is it a good idea? In his newest blog, The Fed Will Ignite the Next Financial Crisis, Lance Roberts points out something very interesting. Since the 70s, every time the Fed has lifted the short-term lending rates, these gray shaded lines you see in this graph here, above the 10-year Treasury rate, the orange line we see here, we have seen a crash or crisis and sometimes a recession. The Feds are expected to hike rates 3 more times this year, and Lance says it's likely the Fed has already lit the fuse on the next financial crisis-related event. Take a look at how this small increase represented in this blue line coming up here that we have already seen caused a jump in interest payments for the fourth quarter of 2017. And we showed you last week how investors were all in on the markets with a growing split between the amount that they are putting into stocks compared to how much they are holding on to in cash. If the markets start going downhill, it's going to be hard for these folks to keep their head above the water. You can read more on Lance's thoughts about the Federal Reserve's plans for the new year at realinvestmentadvice.com. Thanks so much for watching. Be sure to follow us on Facebook and Twitter and find us on realinvestmentnews.com. We'll see you guys tonight on the Real Investment News Hour. I'm Scarlett Fakar.